constantly doing research. I know that we chatted about doing something together. What is on your research docket at the moment? What are you most curious about?
Adam, I would love to work on research with you. I think that, I remember talking to Larry about you about a month ago, and Larry said, Adam is the sharpest person he knows.
He's such a sweet talker.
And he didn't know I would tell you that, but he just talked about that. He thinks we're highly, I think we're highly as well. And I like the feedback you give me on my research always. And I like the work you're doing on ensembles. And maybe there's a way for us to collaborate somehow. So I would love that. I'm working on a couple of research papers in other areas. Actually, just next week, one of my co-authors is going to present a paper that he and I are working on. And in that paper, it's a research about commodity markets. And what we show that term premia that exist in commodity markets are actually driven by the financialization in commodities that started happening about 2003, 2004. It's a really fascinating paper. We've done a lot of empirical work, and we built a really nice theoretical model. So I think that paper is probably going to be the best paper I've written so far. I'm very excited about it. So and I would love to come and talk to you about when it's done.
That'd be great. So just to continue to tease it a little bit. So you observed the general term structure of commodity futures as a function of the estimated amount of capital deployed to commodity indices, and you noticed that as more so-called financial capital is deployed to commodity indices, that it did create a structural change in the term structure of the commodity futures markets.
Yeah, well, let me share a couple of data points. So one data point, around 2002 or so, we saw a huge jump in so-called financialization of commodities, which is that investors recognize that commodities are a distinct asset class, and they start investing in commodities using loan-only indices, such as Dow Jones, SocGen Commodity Index.
How do you measure that? Do you have data on the amount of money that was following the indices at each year?
Yep. I do have the data.
Cool.
And what's also interesting, there's actually a paper that came out about 2014. It was a GF paper, came out in 2014. And the paper actually reported term premia in commodity markets. And it was the first paper ever that talked about term premia. And I haven't seen a single great explanation of why it exists. So that's another data point. And when my co-authors and we did research on commodities, what we found is that before 2002, 2003, term premia were insignificant, and then they became significant. Another data point, I wrote this paper about Chinese commodities, and in that paper, what we find, there are no term premia in Chinese commodities, and that also makes sense because there's no financialization. So what's the mechanism? So let's say an institutional investor wants to get loan-only exposure in commodities. They purchase indices. Indices invest in index commodities, and they tend to invest in nearby spot contracts. Okay, so the prices are driven up in spot, and that's because of that. Since the prices of nearby contracts are higher than farther out contracts, you're able to collect this premium just because of this price pressure from index investors. So we built a model, looked at empirical data, but also there's a way to validate this, because if you look at CFTC report, the COT reports, commitment of trader reports by the CFTC, there's actually a supplemental report that starts reporting index holdings of index investors start in 2012. So what we've done, we actually looked at the data, and we analyzed whether higher portion of index investors results in higher term premia, and that's exactly what we found. We saw this relationship after we account for double cluster by time and commodity. We see there's a very strong positive relationship that's statistically significant.
So do you also then notice you only really notice a change in the term structure for the front month, and the structure for all the other months remains much more consistent through time. But the front month relationship with the other parts of the curve, that changes most dramatically as a function of the amount of dollars, or like the financialization of commodities.
That's right. So really, it's really driven by the front months and of only index commodities. So if you look at non-index commodities, there's no difference, right?
Another
Before and
great
after,
test.
it's the same. But if you look at index commodities, you can see that term premia, they were insignificant and then jumped. And that jump is related to the its proportion of index investors in the commodity market.
Interesting. Okay. And so where's that being published? Do we know yet?
Well, I hope that it's going to be a high caliber paper. So next week, my co-author is going to give a presentation at IIT, but it's probably that we'll need to partner with somebody who can help us take it to a higher tier journal. There are a couple of people that we're considering. I'm excited. I think it's going to be the best paper that I'm going to write so far, life to date. But I don't think, frankly, that I'll be able to take it to a high tier journal just with me, my co-author. I think we need to partner with somebody.
Yeah, well, we'll debate the all the challenges with academic publications on a different podcast. But
Sounds good.
That's great. So listen, this has been a really cool conversation. Thank you so much for joining me and sharing all these insights. And I look forward to further collaboration in the coming months.